All right, so this is the last under quarantine Sunday flow show that's open to everybody. And as much as I would like to keep something like this open, it really, we've been hearing from some members too. It's not fair for members who have been members and the devotion of time more than anything. We get together every Sunday and with members only, both of private Twitter and the room, and I can take questions. I get to everybody's questions. I can take time to explain everything. I can get in detail. You can't get into too much detail when it's open to everybody. So, we wanted to, especially while everybody was in a tough time, locked up in their bunkers, to open up this Sunday webinar. I enjoyed every single one of it with all of you. This is going to be the last one, and then maybe, come the heart of the summer, we'll open a couple up again. We just wanted to give you guys an idea of what we do week in, week out, and what we're paying attention to. All right, a couple things let me get out of the way before I forget, okay, because I'll definitely forget. I got to open this anyway. Any questions you may have on anything we speak about here as far as strategy, subscription packages, courses? Lucci has a course. I think it closes tonight. I think tonight's the last night, if I'm not mistaken. Okay. So if you're interested in that, you go to the products tab up here and you go to Master Course. And I think they're still offering that discount. All right. So if you're, yeah, here it is on the top. All right, if you have any questions on the master course, you can hit up Lucci. Either Luch or Charlie will get right back to you. You can email Charlie at sayinglucci.com or Lucci. All right, but you could probably hit up Lucci on Twitter. He'll get right back to you. All right, any questions you have on the premium package, which is the chat room, private Twitter, the whole 9 yards. If you go here to the strategy section, I know a lot of you have seen this already, or even if you're a new member, you might find this interesting. Quick, short, easy to read blogs explaining some of the basics, so you get a basic understanding. And that's what I hear get a lot of feedback from members. It takes a little bit early on to get a grasp on everything, so everything kind of gels with your trading style, but eventually you're going to see the light, and you're either going to be able to incorporate it into your trading style and find a way to get an edge out of it, or you're not. But in a short amount of time, you'll see the reason why we pay attention to this stuff pretty religiously. All right, so if you go to the strategy section, a lot of your basic questions will be answered there. And like I said, even if you're a new member, I suggest you check it out. It's worth it. What else? Also, if you want, we have a trial. Okay, if you are interested, we have a trial, 3 days, no credit card required. You get access to the trading room, the chat room. You're not going to have access to private Twitter, but that's included in your membership when you do join. Okay. And basically, you'll get a good grasp of, again, what we look for on a day-to-day basis off the 3 days, okay? Also, private Twitter, we spun off if you're looking to go a cheaper route, if you're not in front of a screen as much as you would like, you're on the go, whatever the case may be. We offer private Twitter as its own entity, and you can get that on the product section, this tab right here as well, all right? If anybody has any questions, stick around at the end, or you can hit me up on Twitter. Like I said, myself, Lucci, Charlie, anybody, and we'll answer any questions. All right, what I'm going to start off this week, let's see, what are we down anyhow while we settled in before we get rolling here? Okay, good. I want to start this week kind of where we left off last week, okay? And the only reason being, I want you to see how the game plan, the playbook kind of fits in to the equation of things, whether again, we see what we were looking for or not. How we responded to what we may have seen price action wise, news wise, what we were anticipating, and that and all that stuff, and how and what changes now going into this week. Okay. In my eyes, there's some small changes out there, nothing major from what I was trying to get, the point I was trying to get across to you guys last week. All right. So last week, just quickly breezing through this stuff, right? I wanted to stress at the outset, first and most important thing, we are in the hands of the earnings gods, and forget everything else because that's the most important thing out there. Okay. And you couldn't get a better example of what I was trying to stress to you guys and what this meant than what we saw this past week. Okay. Early on in the week, I forgot who it was. Was it Netflix and Google? Some of the big guys reported solid numbers. All right. Markets gapped up. Market was strong, rallied, blah, blah, blah. Late week, we get Amazon, lays a dud. Obviously you get some selling, especially in the high beta names and some of the big names that rallied off the positive news. So what I want you guys to understand is no matter what game plan you went into last week with, okay, that the likelihood is it would have been pushed aside from the reaction off earnings. Now you could tell me the reaction off earnings was created from something else, but that's irrelevant to me. You know what I mean? So that's what I try to stress to you guys when I say we're in the heart of earnings season and the earnings gods are going to decide your future. Okay. Because no matter how good a bet or flow may look, if a batch of names, they get a bad reaction to their numbers, you're going to walk in, all likelihood, you're going to walk into a nice fat gap down. Okay. So all that stuff didn't mean as much as you thought if there's a variable at play out there that can dominate it in a sense. Okay. So that was the most important thing. We saw that play out. All right. We had a Fed meeting and we weren't expecting anything major, right, out of the Fed. A couple things, some chatter on the street of what people were listening for. What we were talking about was one of the most important aspects coming out of the Fed, and what we were seeing, as much as they threw in the kitchen sink, there's been a little tapering going on, right? And I'll show you guys what I mean by that again this week. But what I mean by the word tapering, okay? It's still an absurd amount, right, of liquidity out there. They fired bazookas, but it's being trimmed, okay? How much of an impact does that have on price action in markets? Well, if you're going to tell me that when they fire bazookas and they're flooding the markets with liquidity, that it's going to have a big impact on price action going higher, then you got to believe tapering will have some sort of effect, even if it's minimal. All right. So it may not be something that's tradable, actionable, but it's something you have to acknowledge. Okay. Another important thing that we discussed last week was the upside Niner exhaustion signals that we were seeing across the board. And we were seeing reactions to those signals. Okay. So in other words, in the price action, in simple English, that Niner indicator, that Niner signal is a signal of where buyers on the upside or sellers on the downside may show some indication of getting tired, right? Exhaustion. And, we saw that even as the market was strong. If you look, like here's a beauty. Like, look at Netflix. Okay, so strong rally, 8, boom, 9 runs into it, breather. You know what I mean? There's so many names that were like that because of the strength of the rally. There were so many names like that, even going into earnings, right? Amazon, Niner, sideways. Okay. And we'll talk a little bit more about why you guys hear me talk about the spot a lot of times, right? Like I like to buy at right spots, even though it could catch a good looking sweep, right? And the market may be strong. If it's at a spot, and that's why I like these Niners, if it's at a spot where a name could be extended and there's a higher probability of a breather, why do I want to choose from that pile? Right? And like I said, we can have a further discussion on that. But here's an example of a name that I was eyeing, okay, and where I didn't pull the trigger because of it, right? So you had this MDB. It was a hot group at the time, right? Caught a good-looking bet with a little bit of time behind it into earnings season, okay? And on top of it, the spot wasn't ideal for me. Why? Because it ran into a Niners off a strong rally, and the odds of a breather sooner than later go up, in my opinion, not dramatically, but good size, right? So you get the more odds of a breather off, a good-looking name, and you get this sideways. Even though the market went down, this thing didn't really get hit hard, just sideways price action. And if you're an options player, right, you don't need me to tell you that if you can avoid these entries as much as possible, okay, especially if you're playing short-dated stuff, that can help your P&L dramatically, right? And listen, sometimes they run through Niners. We know that, okay? But this game is all about probability and odds, right? So if that indicator is showing us that there's a higher probability of a breather or a drawdown coming because of the strength of the rally, why not think twice about pulling the trigger there, right? So that's the way I approach these things and keep them simple at the same time, okay? You still like the name after consolidation or a pull, you fire there. It doesn't guarantee you're going to make money with it, but you avoided premium drain, whatever label you want to put on it, okay? Again, we'll get into that if you guys want at the end. I just wanted to give you an example of what I meant by that, okay? So that's what we were talking about last week with the Niners. Several names. I just showed you 4 of them off the top of my head, strong names that just ran into upside exhaustion, okay? Then we were talking about sentiment, okay? And more so intermediate term sentiment, where we've been spending so much time on that, because short-term sentiment, you're going to get bullish and bearish signals in any market, right? They're short-term for a reason. It takes sometimes a day to work off an extreme signal over the tactical or short-term time horizon, right? But intermediate term is what really made the move off this recent low in markets juicy. Okay, because that doesn't come around as often as we would like. And that's where investors, traders, position players, they're positioned in an extreme way, either bullish or bearish. Okay, and that not only can have a pretty potent impact, as far as squeezes or drawdowns on the other side, but they last, right? Again, it's a different time frame. Like a tactical bullish signal could last maybe a day or two. An intermediate term signal, in all likelihood, is going to last weeks, months. All right, so that's the significance behind it. So we were still going into last week. We still had a favorable backdrop. Okay, as far as the intermediate term sentiment signals that we look at. Okay, they were still not all bullish to neutral, but still a favorable backdrop. One thing that did rub me the wrong way, right? We went over this last week, that had me a little antsy and wasn't making, but the better way to put it was, didn't have me as bullish as I was prior weeks. Individual sector sentiment, you had a couple of key groups really scorched. Okay, and you didn't even need to look at sentiment readings to know biotech, a lot of those high beta names, tech names. There was a good chunk of the market that just got lit up and had incredible rallies. The downside to that is they become severely overextended. And they either need to consolidate and digest those gains, right? Or there's going to be some sort of pullback. Otherwise, the longer they rally through that hot sentiment, the more dangerous that pullback becomes when that trend turns, okay? So the good thing is, though, we did get a breather in some of these groups, right? I just showed you, some of the high beta names like a Netflix, okay? Spent the whole week digesting, right? Biotech, which has been incredible, right? You can see pink bars, red bars, that's heat right there, right? That's heat. You can feel the heat coming through your screen. So you need at least a little digestion there, okay? And this is what I mean about how these things can help you on the entry side, right? Okay? You couldn't get any more bulled up than biotech. There was money being poured in. The only inflows that were coming in were going into biotech, right? Because of this corona thing, for good reason, all new money wanted to own biotech. Had a killer rally. You name a biotech start, you could have thrown a dart at a biotech name over the past 3 weeks and killed it, right? Even the Widowmaker Gilead found a way to trade higher. That's when you know biotech is hot, when the Widowmaker is catching flow and trading higher, okay? Besides spec names, BCRX, that mRNA, you name it, okay? But up here now, the risk reward is a whole different ballgame, right? A lot different than coming off the lows and it's a leading sector pulling out of that correction, that drawdown we were in, okay? So now we needed to see a breather. Any push through this becomes more dangerous in my eyes to look at the sector as far as owning anything in it, okay? It makes me even want to stay even more if it continues to rally through it. But now you're getting a little breather, okay? So what we were seeing on the individual sector side of things is doing what it needs to do, very simply put, okay? But as I mentioned, going back to last week, and that's why I bring it up, it was a concern, okay? Especially the hotter groups. And then we had the final thing, which has been the talk of the town, because it's been probably the only group out there besides Ackman that we know about getting long when everybody else is hiding in their bunkers, right? And that's the Sharpie crew out of the COT data, okay? And they've been bullish, okay? Going into last week, they came out of buy signal territory technically, but not by much, okay? So they remain long with last week minimal hedges going back on, all right? And we'll talk about this week. I mean, I'll spill the beans a little bit. We're going to go over anyway, where they added a bit to the long side, to their long positions, okay? So they're still long. And as far as the specs, the spec crowd, we call them the riffraff specs, right? Going into last week, they covered a little piece of their short position. This week, it was kind of unchanged going into this week. Looks like maybe they added a tiny, tiny bit to their short position. All right, so that's how things played out, and that's what we were looking for going into last week. All right, and the reason I will go over this is not to show you, how it would have played out, throughout the week in real time in a sense, but there's not, in my opinion, there's not too much of a difference going into this week, okay? And if you see the playbook on the bottom here for last week, I think it still applies for this week, all right? So we're still in earnings season, right? Some of the big boys have reported. We still got a ton of earnings, okay? A ton of earnings. So let's go look at all the stuff here, and then I'll give you the playbook, which is pretty much the same thing as I mentioned last week, where the best moves are going to come off weakness and pullbacks type of thing. And we're in the midst of getting that now, which is good. Okay. So here's the short-term tactical stuff. This helps us out not only for short-term intraday and extreme short-term trading, but even if you're a position trader, you will find it efficient for entries, right? Finding those entries, okay? When tactical sentiment is hot, you know, I have a buddy who basically that's all he does is position trade. He doesn't day trade or anything like that. He calls it the better entry signal. So if tactical sentiment's hot, it's telling him wait for a better entry, okay? And then when tactical sentiment gets bullish, that's where he starts looking for entries, okay? Keeps it simple. So here we are going into next week. I had tactical sentiment as a whole neutral, but it leans bullish. Oh, wait, this is last week. Let me go to this week. My bad. Okay, tactical sentiment going into this week, I have listed as neutral, but it actually leans bullish. Okay, here it is. Favorable, I listed it as. Why? I got the squeezometer 36% bulls, right? Going into last week. Do I still have that up? Of course not. That would be, oh, here it is. Neutral. Okay, so that's softened, and that's a really nice number, 36% bulls on the scale of 0 to 100. End of day short-term sentiment is neutral because there's no signal there, but looking at futures where they're at right now, if they end anywhere near there, we're going to get a bullish signal out of that. Okay, so it leans bullish in my opinion, and we're going into a new week with favorable short-term setup. All right, the put to call ratios, God almighty. You guys saw me post on Twitter on, I think it was it Tuesday or Wednesday into the rally? The equity put to call had a 4 handle. A 4 handle. 4.5, you remember that? Honestly, guys, I don't even remember it that low on the all-out chase before the virus came. I don't remember seeing a 4 handle. You know, but again, we got to understand what's going on. When you got players getting short, right, and then they get squeezed on a rally like this, they're going to aggressively buy calls to hedge their shorts. So it's not a coincidence that we saw the put the calls really scorch and get cooked as we saw squeeze in real time at, what was it, Tuesday, Wednesday, wherever it was. Okay, so a lot of people were getting squeezed. We saw it in the flow as well. We saw it even in the short chart that I post every week. And that had a lot to do with why the equity put the call was so hot. But again, it was hot, right? A 4 handle. Anytime we see a 5 handle, we kind of get a little leery, right? A 4 handle, that's pretty cooked. All right, so now the put the calls went from that side. Now they're elevated in a sense. Okay, I think the equity put the call is, I think, with a 7 handle now, if I'm not mistaken. All right, so a whole different bull game. Whole different bull game. All right, so that's short-term sentiment in a nutshell. We go into tomorrow where weakness is an opportunity for a tactical trade, right? A snapback trade. We'll talk about that some more too when we get done with this. All right, intermediate term sentiment is still right where it was, favorable. Okay, and I'll go through a couple of them. I don't think I put this on the last week because I forgot it. Equity hedging, okay, people hedging their equity positions, neutral, but not right outside a bullish signal. Okay, so more bullish than neutral. A bull bear indicator, which is based totally on flows, is still at 0. 0. Okay, it's just based on flows, hedge fund and fund flows. Okay, equity 8 handle. Thank you. So Jonathan just told me the equity put the call right now is 0.82. That's a big difference. Okay, that's bullish, an elevated signal. All right, so where are we? So the bull bear indicator is at 0. I'll take questions if you're wondering why and you don't understand. We went through it. If you're members, you probably know this already. The daily sentiment index, neutral. I think it's in the 40s now after Friday's pullback, right around the 50 level, okay? Weekly retail put to call, right? We had the bullish signal, that's neutral. Smart money indicator basically loves to buy dips, that indicator, still favorable, okay? Right outside a bullish signal. AAII actually flashed a bullish signal again last week, okay? So that's still bullish. NAIIM, which is professional money, actually made a pretty big move from bullish to neutral, okay? But still neutral. You don't see any heat here, right? Any heat on the key measures, right? I don't see any. Fear, greed, neutral. You guys see that a lot, right? Panic, euphoria model. That too was mostly in bullish territory, finally got back to neutral-ish. And, you know, the kicker, which we all love to see, hedge funds are net short, okay? Haven't participated in an ounce of this rally, and they remain net short, okay? I got a couple of charts I'll show you on that as well. All right, so intermediate term, as I have listed here, is favorable. And here's what makes favorable important to me, okay? What it tells me is, if, let's say, we had a couple of days of weakness, okay? Let's say there were a couple of days of weakness, which is totally normal, right? Markets go up and down. Markets could go down for a couple of days, for a week, okay? The likelihood is anything close to some decent selling, you're going to start to have these things light up bullish again. Okay, so that's what makes these, you know, all these indicators as a whole a favorable risk reward setup. Okay, because if you do get weakness, the likelihood is that will be a solid entry on the long side. Okay, as opposed to like when the virus hit, right, before all this stuff here was above neutral to scorched. Every single one of them. There was no such thing as bullish. Most of these things were lit up red, okay? So you can't say, oh, just buy weakness anyway when all these indicators are scorched. What that tells us is that if the market does turn, if the trend breaks and there's some selling, there could be some velocity behind that selling because everybody's long in an extreme way. Okay, there's a lot of supply. Here, we don't have that, right? Hedge funds, they have nothing to sell. If anything, they're shorting. Okay, so that's what makes weakness an opportunity to look for a long entry here, because the likelihood is anybody who's selling is shorting and they're going to squeeze the shit out of them. Okay, so we got a favorable intermediate term and we got a week of a sell-off. They'll probably start lighting up bullish. Sector sentiment, the takeaway for me, it's right here, is limited upside. Okay, here's what sector sentiment looks like after last week. And again, we've had some consolidation and some pulls. Okay, but let me blow this up if you guys could see. All right, so now let's say I want to get bullish here, right? Let's say I want to get bullish. I got the tactical signals already telling me I could look for an entry, right? I got my intermediate term readings telling me favorable risk reward, right? The Sharpies are buying, hedge funds are shorting. I want to start looking for an entry, okay? Outside of a tactical trade, a short-term snapback trade, right? A squeeze of any shorts, where am I looking right now? Okay, that's the problem I have now. Where am I looking? Basic materials, you know, still hot. Biotech cooled off. Look where it is. Consumer discretionary, which is Amazon basically. Energy, I can't buy it when energy's a bullish sentiment signal. I'm going to buy energy up here now? Christ almighty, I'd rather play Russian roulette. Right? Financials? Yeah. I mean, they got some room, right? But I told you, my takeaway from this is, at best, the upside is capped. Meaning, if financials do rally this week, they're going to get cooked, right? They'll be cooked. Healthcare is just starting to cool. Housing, still high. Industrials, where the Sharpie money is, you have a little bit of room. Retail, you know, look at Exxon oil producers. God almighty. The semis are coming in nice. They're starting to come in nice. You rather them come in some more. Tech, same thing. Utilities, the Utes, right? And who wants to trade the Utes? But that's where, yeah. And listen, if money rotates into the Utes, chances are at best we're going to have chop in the overall market as a whole. You know what I mean? So, you know, you want to tactically trade the Utes? Yeah, listen, I know people who have done that. There's some nice names out there that can move. But, you know, when you want to get bulled up, right, you want the semis, biotech, healthcare, tech, right? You want the high beta stuff. That's where you find the big moves, right? Even though the Utes have been crazy, so I don't know what the hell I'm talking about, but you guys know what I mean. That's all the stuff you guys like to trade. I like to trade. There's nothing better than the semis when they're set up. So my point is, off what I'm saying as a whole, sector sentiment is showing me, okay, is that weakness is still the opportunity, but for tactical trades, right? So in other words, I'll give you an example. And we spent some time last week and in the room on this, so that's why I'm using it as an example. Netflix, okay? And Netflix falls into that hot category, right? It's a perfect example. So we were talking about Netflix during the week, right? Because a couple people in the room nailed it perfectly. They bought, I think it was this dip, or it might have been this dip, actually. Okay, they bought some weakness. There was some sweeper activity there. Nothing major, but there was a little bit of sweeper activity. Okay, they wanted to buy Netflix on the dip. Maybe they avoided this and were looking for a snapback trade. Okay, but here's your snapback trade, and this is where a lot of players get in trouble without that playbook and game plan. Okay, that's a decent tactical trade right there. You understand what I'm saying? So now, if because you nailed the lows or close to the lows, you're playing for new highs, okay? But this is, we already looked at sector sentiment, is pretty hot as a whole. The likelihood is that these things may trade like this for a while. And that's where you get, you know, traders using the same terms over, I'm getting chopped up, or premium burn, or, you know what I mean? Because they're treating this setup like they would treat a setup where sentiment was on their side, and they can lengthen the leash on a name if they wanted to. You understand what I'm saying here? So in other words, like for Netflix, the only way I would look at it while it's doing this is for that tactical trade where I'm going to take the money and run. Okay, because anything else, the likelihood is you're going to give back your profits, and with options, it usually translates into losing all the money. Okay, so that's the difference. That's the difference. All right, now it takes a little bit of discipline because you're waiting for the weakness, and then when it looks its best, you are looking to sell it, right? Again, it goes against the way we're wired, but that's the playbook right now. That's the playbook right now, okay? And it's more to it than just this, all right? It's not just sectors that we're looking at that's showing us there's not much upside room for too many things out there. The other thing is you got all this. All right, so you may buy a semi and you may buy it off weakness and you catch a rally the next day, okay, or the next 2 days, and now you want to hold for more upside. But AMAT comes out and warns and shits the bed and takes down the whole group with it. Now that semi you're in, right, look good for a couple days, and it doesn't matter because it's going down with everybody else in the group. You understand? So this is another, another headwind, another variable at play that you cannot control. All right? So that's part of what the issue is here with earnings season. We also, if we had sector sentiment, down near bullish territory, and you wanted to make the argument, even with earnings, if that name doesn't have earnings you want to give a leash to, you could make the argument. But for me, just coming out of heated territory, you rather see them digest some more of their gains, right? Let the market chop around, let them squeeze shorties, let them screw over some bulls, you try to trade around that, and then ultimately there's going to be a better and a cleaner setup as we wind down through earnings season. All right, so that's the sector. Anybody have any question on sector sentiment at all and how it plays into? Pretty self-explanatory, right? No, that's a good question, Jason. Jason's saying, does it have to be in bullish territory? No. See, and I can tell you how I look at it, right? And then eventually, each and every member, they make their own judgment off this stuff because they may trade different. Like for me, here's the example, okay? I don't like to hold stuff through earnings season. Like I told you 2 weeks ago, the stuff that I was holding on to long, I still like those names and the flow it caught, but I sold a lot of this stuff just because I didn't want to take the earnings risk. Not even that particular name, for everybody else who's reporting, okay? So me, I go into tactical mode no matter what, every earnings season. More than likely, every earnings season, okay? Because I feel I have a lot more confidence when earnings gets out of the picture. I have a lot more confidence in the flow. Right now, I have no confidence in the flow. Zero, outside of momentum right here and now. Okay, so if we get through earnings season, to answer your question, Jason, and semis are at neutral, and all of a sudden somebody comes in sweeping Micron calls like he's got tomorrow's newspaper, I want to own Micron. I'm not going to wait for Micron for the sector to get into bullish territory. But if earnings are out of the picture and I know the Micron action's clean, right? And as a whole, the group, the upside is not capped, right? It's neutral. I have some room. I trust the flow. And that's the stuff I want to swing. Okay, so to answer your question, they don't have to be bullish. Sometimes it lines up. See, like when Sharpies were buying, intermediate term sentiment was low lighting up bullish, right? 4 weeks ago, whatever it was when we were talking about all this, you could see on the charts, were all lit up green, right? All lit up green. So, that gave us hence a green light to, if we start seeing flow in some of these names, based on sentiment as a whole, boom. You can give a leash to the things you're taking a shot on. Now biotech, right? And you're going to look at this all as a risk reward type thing. If you're going to buy biotech as a couple biotech names into heated sentiment, right? Your risk reward, how could that be favorable? It may trade higher over the short term, but what this tells us is the probability sooner than later is of some consolidation or a drawdown. Okay? And that's the way to look at these things. All right, so you don't need bullish sentiment signals out of this. Like, in other words, even sentiment as a whole, right? If again, outside of earnings, let's say we go into post earnings, right? The majority of the bigger names are done. We got a lot of post earnings candidates that could catch flow. Okay. If I start seeing sweeper activity, if they're coming hot and heavy for a bunch of names, if sentiment's neutral, I'm not waiting for sentiment to light up green to pull the trigger because I trust the flow. You understand? I trust the flow. Right now, I don't trust the flow because it's earnings related positioning. I don't know if that individual's placing an aggressive bet or he's hedging, replacing stock, or all the other things that go up in odds around earnings season. So it's a combination of me not trusting the flow, right? So I'm going to lean on sentiment more during earnings season. Yeah, so in other words, it's looked at, exactly, Steve. Everything we look at is through a contrarian view, okay? So like all this stuff is near heated territory. That tells us that players are leaning too long, right? Like biotech, I don't know if you guys saw the inflow numbers. It broke records of money coming into biotech, funds, ETFs, everything. You know, that's why this thing almost went through the screen. But you could see here, right in the past, look, gets heated, little pull. Here's what I talk about the upside being capped, okay? Gets hot again, but then look what happens after that. Whoop. You know, so obviously your best risk reward is going to come off the lower half here than the upper half, right? Now, it's okay to trade these things. Like, I'll give you an example. See the fins? Okay, that's not hot. It's got some room. So it's, in my opinion, it's all right if you're looking to play a financial for a trade, You understand? But if you're not going to take that profit off the table, and then the financials are going to be here and you're holding, looking for more, you better understand what risk you're taking on by doing that. Does that make sense? You know, so I kind of use this sector stuff mostly for upside room and rotation spots. Okay, like when we see heavy rotation in the markets, okay, a lot of times you'll see like semis, tech, right? They'll get hot, okay, and then they'll cool off, and then housing, industrials, and biotech will see some rotation. You know what I mean? And healthcare, right? And then they heat up, and then money goes back into tech, semis, because they cooled off a bit. And you see that constant rotation that holds up the markets. You know, that's where this stuff is efficient. But right now, a lot of things are correlated to the market when you get into these type of environments, to the overall indices. So they're all either cold or they're all either hot, basically at the same time. You know, like the one exception is utilities, and that's just because it cooled off quicker and more than the rest. All right, but again, especially if you're not members, the main takeaway for me off this right here is that it tells me to still continue to stay tactical. Okay, I'm willing to be pissed off about selling a winner too early when the odds are against me of having that big winner, if that makes any sense. All right, so when these things were in green territory, if you remember that webinar, I was talking about tucking stuff away with some time, remember? Buying weakness and adding to it with some time. Okay, why? Because these things were on the other end, and yeah, they could still trade lower, but the likelihood is bears are at an extreme that there'll be some sort of rally and squeeze, and I have some time to wait around for it. Okay, so it's kind of the opposite I'm not playing the short side. And especially with this, I'm not playing the short side. I'm not falling into the riffraff camp over here playing the short side. So my way of being a little more conservative is just being tactical and staying quicker rather than buying AAP September calls with some decent size. That's the difference for me. Yeah, energy, it's funny because I haven't really been paying attention to it, but apparently energy got pretty hot, huh? These energy names. I know there's been some nice rallies. I didn't realize that nice. Yeah, and that's the thing, exactly, Ani. Your profits deteriorate when things get heated. And the other risk is that you get that quick wash, you have no time to sell. A lot of, like you're saying, a lot of your premium just go poof. While they're consolidating, it almost like leads you on. All right, it doesn't look too bad. And then you get an update. Oh, forget sentiment. This thing's going back to new highs. Look how strong it looks today. Right? Then finishes off the highs, a little more weakness. Oh, it's hanging in there. It's holding the lows. And then whoop. So that's what happens more than likely. Nothing happens all the time. Okay. More than likely, when you're seeing Niners and you're seeing hot sentiment, it translates into a drawdown or something like this. Okay, sometimes just sideways. All right, here's a Niner on Netflix. Just as I'm talking, I found another example right here, right? So here's another good example. Okay, see the pink? That's telling you there's heat there. Okay, that's your Niner here. Look, it went higher. Okay, so if you were buying on this breakout, I'm just giving an example, and you were playing tactical, right? You probably got a trade out of it. Okay, but if you were looking for more, look what you ran into. And then poof. So that's what you're trying to avoid, right? There still could be some money to be made, but you don't want to overstay your welcome. Okay. So, my point with everything I'm showing you guys here is that as bullish as things still appear to me on the sentiment front, because they do, okay, I can't, what am I buying? Usually I always rely on sweeper activity to place my bets. Okay. The problem with sweeper activity right now is I don't trust any of the bets. I'll give you a perfect example of that. FLT caught an effing missile on Friday. Okay. A missile. You got a little bit of a pull here off a nice little scoot. Okay. Aggressive bet, big bet in size. Here's your earnings, 5.7. Okay. Now you may want to tell me, well, Jesus, that's a big bet. It's an aggressive bet. You might be able to catch a trade and get out before 5.7. Yeah, that's tactical. You know what I mean? Where if FLT caught a bet, right, and earnings aren't in a couple days, and I don't think it's an earnings, I don't know if it's an earnings bet or not. That's the whole point. It's difficult enough without earnings trying to figure out what their motive is, right? That's why we try to pay attention to the sharpest, the most aggressive activity. That's why I only swing off that pile of names, that group of stuff, okay? So it's difficult enough just by reading the order flow, trying to figure that out. When earnings come around, it's nearly impossible. I had no idea what that order means. No idea. And from my experience, I'm at the point, right? I've been through enough of this that I'm not wasting my time trying to figure it out. There's a more prudent and an easier scenario to all of it, and that's just sitting tight and waiting to get through earnings. You understand? It's that simple. There's more than enough action and market and opportunities to go around that you can relax and remain tactical during earnings season. So that's how I approach it. All right, but that's the confusion. Exactly that. FLT caught a beautiful bet. And, you know, you got to take it down several notches because of earnings. All right. This is the Fed stuff. Again, I have an opinion on it, but it's not based on facts. It's based mostly on maybe my own eyes off price action and stuff, you know. But there are different opinions out there. Right? Sometimes a lot of people think the Fed liquidity trumps all. And, you know, there's a smaller group that think it's all pure coincidence. So here's what they're doing again. Last week, they cut down on both fronts, buying treasuries and I think the repo. And they're doing it again this week from 10 billion down from 8. Where did they start this number again? It was something ridiculous. What was it, 50? 75? Are you serious, Steve? It was 75? Oh my God. Oh my God. So, all right. So 75 down to 8 billion. 8 billion is still a big number. You know what I mean? But it's 75 down to 8. So there's some tapering. There's some tapering out there. You know, is it a coincidence? You know, the market got wind of it. You know, kind of looked a little shaky this week. Went up, went down, choppy. I don't know. You know, I don't know. But, you know, things are smoother around when they're pumping liquidity in and not tapering. And listen, like there's both on the fiscal front and the Fed, right, as far as monetary policy, a lot of people think they have to do more, right? We already know the bailout list is going to run, right? So there's more that's got to be done. The likelihood is there's going to be periods of weakness that are going to get them to do it, if that makes any sense. You know, they're not going to do it. It's very unlikely that they're going to do it with SPY running parabolic to highs. You know what I'm saying? There's going to be periods of weakness. There's going to be selling with some noise around it. And that's the likelihood where you're going to see them intervene. You know, that's where you're going to see them intervene. So that's what we got to look for. You know, keep it. Again, if you're playing tactical, it really doesn't change anything. You know, it really doesn't change anything. We're playing off weakness. We're playing for the snapbacks. That's not going to get in the way too much. But even more the reason to play tactical right now with a little tapering going on. All right, and I think that's basically it. Oh, the other things here, I'll show you guys hedge funds. I got the chart of sentiment trader and another one to show you, showing a little bit of what's going on there, hedge funds. Again, Sharpies, no major change there. They added a little. It looks like maybe a little to the S&P and a little to the Dow and not to the NASDAQ, if you break it down. Jay, you're raising your hand? Or are you by accident hitting your button? I see a prompt here. Jay raised his hand. Where are you? And Gerald Ball raised his hand. I don't see that. I see it popping up on my screen. Where are you guys? Oh, okay. I thought you really, maybe I ignored your question or something, Jay. Yeah, well, the Gamma, why I have Gamma here not available. Every expiration, there's obviously a change, and I'll learn more about that either later tonight or in the morning. And Paul, I'll post it and give you guys an update in simple English, like I usually do. But yeah, for most of the week, basically the play on Gamma was, you know, drift, not much selling involved. That whole sort of thing. I don't know how much Friday expiration, if at all, changes that. I'll learn more about that tonight and tomorrow, or tomorrow. Yeah, that's what I'm saying. You got some polite individuals here raising hand like I'm preaching in a school here or something. No, honestly, I thought maybe I missed your question and you thought I was ignoring you. All right, so here is hedge funds, because I know you guys enjoy this. So here's the sentiment trader chart. Right? They feel so long ago, John. So pretty cut and dry here, right? This has been the situation here for a bit. Here, they were all in for a while, for a good portion of this rally. Stubborn above this red line means they're net long, a little too long, okay? And then markets start to unravel and they just got to spit them up, as usually the case, okay? But what happens a lot, they try to outsmart markets, right? As the market rallies, they don't believe it. And they short into it. You know, so this is another reason why I think the weakness should be contained. Again, there could be weakness. This doesn't tell us that there can't be down days. You know what I mean? Nothing is going to tell us that. But what this tells us is that, you know, worrying about these guys selling, which was a problem here, is nowhere near the case. It's actually the opposite, where they're probably going to get squeezed. You know, because it looks like they're adding to shorts. Oh, is that what happened, Jay? Don't worry about it. I just see it's a little prompt that comes up, and I saw it flashing, and I noticed it. Otherwise, I probably wouldn't have even noticed it. Don't worry about it. All right, and here's the other chart. That this is in the futures. So a little different. This is just S&P 500 futures, but pretty much the same premise here. Short. See? So here, in reality, in the futures, you have Sharpies long, and I guess hedge funds are probably in the riffraff category. I don't know, but riffraff and hedge funds short in the S&P futures. All right, and you know, because I get this question, and I think this is what you guys are asking, based off my experience, right? Have I seen Sharpie set up like we have now? How it played out? How would it play out with like the market where it is here? Okay, because like I mentioned to you guys, nothing is better than where you first start to see Sharpies get long, especially after they were 100% hedged. When they finally get all in long, that's the sweet spot. Okay, what becomes a little more difficult as they stay long, right? They're just staying long right now. Okay, so it's different. We have to pay attention to each and every week whether they're slapping hedges back on, right, or not. And right now, they're not. Okay, so what the takeaway is from that, for me, is, again, buy pullbacks, right? Buy weakness. Because they're long and they're buying, okay? If they weren't bullish, they'd be totally normal. As a market goes higher and they're long, they would be slapping on hedges, okay? So that's the difference. Now, I'll show you where a scenario played out. You know where I'm going. It's only one period. I think if those of you who are members already, I showed you guys this, but back in 2007, 2008, okay? And I'll show you how it played out. Okay, just giving you an example how it doesn't mean it's going to play out this way now. I'm just giving you guys an example of them being long and then switching in a sense, okay? Oh, where are we? So long ago already. Okay, here we are. All right, so it was right around here. This is 2007, yep. All right, so you see this pole? They bought it all in long, okay? So they went from having hedges, max hedged again, similar to this setup at the highs, okay? And staying bearish until they got to the lows, and that's where they went all in long, okay? And they remain that way the whole way. So similar to what we're seeing now, Sharpies remained long and didn't put hedges back on this whole trip up to new highs, okay? And then what happened, let me move this out of the way for me. Right where that niner is, coincidentally, I didn't know that was there, honestly, okay? But right here, see how the market really didn't do too much, like sideways action, maybe a little bearish tilt? Each and every week, they started to put hedges back on. Okay, so it got out of bullish territory, and each and every week, they put more hedges on, more hedges on, more hedges on. Okay, and then eventually, they had no more long position, and they avoided the bulk of this. All right, but it was a scenario similar to here, where they got in and remained long for this whole trip up, but then during this period here, okay, that's where they started to put hedges back on. And if you guys remember, those of you who are members, I showed you this dip, okay, a lot of times they would add to their long on what they hedged. They didn't. This dip, they would do the same. They didn't. So they remained fully hedged for a lot of this downside here. You know? So that's, I'm giving you the guys an example where they remained long. Again, the perfect spot on that trade would be in the vicinity of where they went all in. Okay? After that, they were long, but it wasn't their entry. You know, they just held long and they remained long. So that's where it could get kind of tricky. You know, that's where you want to pay attention every week and see what they're doing. You know, and as long as they remain bullish, you know, you want to look to take advantage of weakness. That's the general view. You know, and again, those of you who are members, when flow gets back into the picture, it's going to be a huge help. You know, it's going to be a huge help. Because we'll know when real buying is coming into weakness and not just earnings flow. You know what I mean? Right now, I feel lost. I feel lost. So, but by the end of this week, once we get through this week, things will start to clear up. And there'll be more names to the pile. But we got a nice little dip here anyway. So tomorrow I'm going in looking for something to stab at. I don't know what. Anybody have any ideas? I might just make a play on the market or something like that. You know? And so basically what I'm looking to do anyway is you got this weakness and I'm looking to basically play the snapback. That's all. You know, that's what I'm looking for now. I'm not looking for this unless it lines up, again, with earnings out of the picture and I'm seeing flow confirm it. But I'm just looking for like that Netflix trade. You know, the bears get run over a little bit and get squeezed. And hopefully I could get a trade out of it. Yeah, you know, that's the thing now, right? There's like X is catching a little bit of action. The tech caught a little bit of action. You had a period where they were finding a lot of these beaten down names for a squeeze. Even the airlines were catching flow, you know, but we were in squeeze mode. You know, we were in squeeze mode. And that's why I think this sector sentiment as a whole was looking last week that cooked. You know, a lot of even the squeezed garbage participated. right? Even names like SDC, which has been shorted out to wazoo, caught a nice squeeze. So now it's a little bit different. Now it's a little bit different where, we can see a name catch flow and it could be earnings related. And I really don't know, so we got to wait. And in a week or two, if we're still seeing similar flow, we could look to take advantage of some of this stuff. Yeah, AMD, it was breathing off earnings, right? So see, that's good. That's good. Right? Because if it was trading higher, it'd be a waste of time. Baba. Well, you know what screwed you there? Probably Tree, the China news now, right? Which in reality, I don't know how big of an effect is it going to have on Baba. But yeah, Baba earnings are coming up. Is that a real date? May 11th, yeah. GME quarter. There were definitely, there were definitely beautiful squeezes out there all over the place, all over the place. So that's why I'm hoping a little bit of weakness like we had here will give us maybe a couple day window of some nice squeezes again. But, what we just had as a whole, not even just the markets had what was it, 30% off the lows? You had some names go crazy. Like I said, the participation, especially in high beta and the names you guys like to trade, whew. If you got a little lucky with some of those things. Exactly, Tree. That's why me too. You're more like me, Tree. I'd be more discouraged if we were rallying through sentiment being hot at that point. You know what I mean? I'd be more frustrated because things would be going up and I wouldn't be participating. I sold a lot of stuff. So I wouldn't, besides what I'm holding on to, what I left, I'd be pissed off that I sold. Oh, so there you go. You're on the same page I am. So I'm actually happy that there's some selling here. I really am. Exactly, Ryan. Exactly. Because I think ultimately it's going to set up, if everything stays the same, okay? If everything stays the same, which I really don't see changing, okay? So in other words, this is not too far off these things flashing bullish, right? You get, and this is what I mean by that, you get something like this, okay, down to here. The likelihood is all that intermediate term stuff is going to be lighting up green one by one, each and every one of them, And then you have Sharpie still long, you're going to have a nice little entry here and some juice. You're getting shorts reeled in again, right? You're spitting out some sloppy bulls. You're going to have some nice gusto behind a squeeze. Even if it squeezes back to the top of this range, it's going to be a real nice move if you're ready for it. So that's why, this is so far so good. We complain we don't get weakness all the time. We complain about it. This is good. My complaint, Sean, and it's earnings season. That's my complaint right now. Hopefully we start to see post-earnings flow, and then I won't be complaining about that either. That's my complaint. Because I'm lost out there right now. I'm lost. Completely lost. Now, anybody eyeing names for this week off earnings or hoping they catch any action? Sure, Adam. What are you asking? 429 IWM tattooed. How do you interpret that being next 2 days so decent drops? Such as I think I know what you're talking about. IWM. And again, this is where, if you were in the room, you probably would have known a little bit better. I think I made it clear on private Twitter, but let me see. There's a difference between tattooing initially and rolling, okay? And what I mean by that, sort of like what we're seeing with hedges right now. So you get IWM, no. That caught that bucket of action into heat, but they also played the last couple of days and they were rolling. It wasn't new money. Hold on. Let's see if I could find it here so you know. 429 right here. Okay. So you see and this is, you're new, and this is a great question, Adam, because if you don't ask this type of question, it's going to be even longer till you realize what to look for. Okay. What I stress, if you're on private Twitter, not in the room, pay attention to the commentary more than the flow. I'm being honest. I know that may come across as arrogant, but I don't mean it in an arrogant way. You're a member because of the commentary, not the flow. You could set up a scan anywhere and see the flow. Okay. What you're not going to have with a scan, you're not going to have somebody with the experience looking into the flow to tell you about it. Okay. So this is what I mean. This is what you're talking about on 429. Okay. All that IWM action that was coming in. If you have a scanner, you're like, oh my God, somebody's really buying IWM into strength. But what I'm trying to stress, and maybe you didn't understand or maybe you didn't see it, I'm telling you that there's action closing, okay, and they're likely rolling them out, pushing the action out for more time. You understand? So players who were long the May 130s are selling. They sold $10 million worth, and there's flow going into the June 150s. Make sense? All right. So that's why anytime and you're going to realize, Adam, and everybody, I'm not making it up, they'll vouch for me. The action that gets me excited, you're going to know I'm excited. I won't shut up about it. You're going to see it on Top Bet List. You're going to see it on my posts throughout the day talking about the action. The cleanest aggressive activity is, I'm going to make it crystal clear to you that it is. Okay. So if I'm not getting excited, if you're seeing size out there, thanks, Ray. If you're seeing size out there, and you don't see me talking about it, because a lot of times people ask me, oh, Jesus, you see that block? There was an $8 million block bought on the call side. I won't even talk about it because it means nothing to me. Not even an ounce of bullishness in me off that order. All right, but when something catches fire and catches good-looking action, I make it crystal clear to you guys. That's my job. Yeah, so in other words, basically came out of size, and just where the bid and the offer was at that particular time, that average was below the bid. No, it means a seller. This means a seller. No question is dumb. You're right, Tree. This is a seller. That means he sold or she sold 13,000 May 130s at $7 bid. Yeah, so in other words, that's a good question. I got some non-members. So basically, we offer, and that's why I said go to wallstreetjesus.com. You could see it all there. We offer a premium package, okay? The premium package is this. Okay, it's access into this room, and I'm broadcasting throughout the day, and you are going to see my screen with the Niners on there. That's what I'm showing. But I'm broadcasting as the flow comes in, telling you what's clean, what's not, what's bullish, what's not, what I like, what I'm buying, what the reason I may not be buying it, what I'm complaining about, you hear it all, So that's in the room. And if you're a member of that, you also get private Twitter. But if you just want private Twitter, like Adam is just on private Twitter, you're going to have to pay attention to the commentary because you're not going to hear my voice. So that's where But then we have webinars too, where we go over this stuff. So like Tree just said, there's no such thing as a dumb question. The only way you're going to shorten a learning curve here is by asking questions at them. So always, that's what these webinars are for. You know, especially you members that, you know, and that's why we're, after today, nothing against non-members, but I can devote time to members who have questions like this and, you know, make it crystal clear to everybody so everyone understands. But in this game in general, there's no such thing as a dumb question. It's the only way you're going to learn things. You know, there are good books out there and people talk about books. You're not going to learn anything from a book. You know, maybe you get a little background and a little familiar with stuff. It's all hands-on and asking questions and seeing with your own eyes. All right, there's no better proof than seeing with your own eyes. And that's why I tell everybody that joins initially, okay? Don't feel you have to come in right away and try to make money. You know what I mean? You can't put a time limit on things. You can't feel like some people take the 3-day free trial, and if they make money, they join. If they can't make money, they don't join, which is ridiculous. You know? So what I suggest to everybody that's out there, you know, you want to see the true impact of sweeper activity. You know, you're a day trader, pull up an intraday chart, a 1-minute chart, and just watch the sweeper activity as it comes in and what I'm saying about it. And you're going to see how things react to sweepers, and what the market was doing at time, why it ran out of gas, why this one was strong. You get all those answers in real time right in front of your eyes. You know, you don't have to risk your money to notice these things, you know, until you become more familiar. Little Super Saiyan Blue bounce. Hey, y'all. Joey, where are you? So yeah, hopefully we keep this weakness tomorrow and we can find something to buy. I didn't play anything. Did you guys play anything Friday? I didn't touch one, not even a day trade, not anything. Not a scalp. Can I discuss the RightX? Oh yeah, OBSJ, there's a couple of people who like it. Tim likes that indicator. It measures option buyers. It's an option buyer's game. Okay, so it kind of lines up with the put to call in a sense. So when you see a hot put to call, you're going to see, Chan, that OBSG pretty high. Okay, but it's a lagging indicator. In other words, it's hot now, where you almost could have I could have told you it was going to be hot early in the week. It lags. You know what I mean? But some people still like it as a background indicator. You know, the Nova Ursa is actual fund positioning. There's a bullish fund and a bearish fund. And when they're bullish, they go into one fund. When they're bearish, they go into another fund. The market we're in right now is a little too funky for Nova Ursa. It's a little too crazy. That's better in kind of range-bound markets and stuff like that. You know, so, but you know, listen, I like to look at everything, and there are members who do the same. Some have a preference over some. You know, the majority, my key, like the key stuff, is a lot of the stuff that I talk about on here. Even more so as a whole, you know, as a whole. Lucci, again, he did it. Lucci, you're rapping on the other mic. Yeah, he did it last time. He likes to throw his jams in from time to time, you know? He gives us a little background. He's got bars. He's got bars. So what was I saying? Anybody play anything Friday? Just out of curiosity, because I didn't touch a thing Friday. On the long side or nothing? No. NVIDIA. Yeah, I like NVIDIA. I wish earnings weren't there. You got a nice pull You might get that snapback opportunity if you like NVIDIA. You know, you see some flow tomorrow, and when's earnings, right? You got a little bit of time, May 21st. Roku's this week, Andre, isn't it? Isn't Roku this week? Sheesh. Yeah, see, here's another niner. Like this is a beauty. You know, this is exactly what you want to see. You got freaking earnings in the way. Hopefully it doesn't ruin it. But this is like exactly what you wanted to see off that niner. Exactly. Niner, right? Red area. Here's your breather. So now all you got to do is see a little bit of sweeper activity come in. If you were eyeing the name, that's your spot. You know, that's your spot. And again, you're better off if you liked Roku into the niner and you played it smart, didn't chase and waited for this, you know, this is your entry. But again, this is the problem right here, earnings. So flow is not going to help you. Sweeper activity is no indicator here. That's the problem. You know, sweepers are, they don't indicate a thing. Unless you get a Google guy right before the bell, that little bastard. But even then, you never know what's what. Their exhaustion signals, Tom DeMark, TD sequential. HD, when do they report? I like Home Depot. Wow, that's a strong name, huh? They report the end of May, right? That looks so good. That looks so good. You know, maybe you get a little earnings weakness. When are they ever like going to rotate seriously? Like Goldman put a note out. Did you see the Goldman note I posted today? Like they think the big guys, and we've heard this before, like these guys have minimal upside at this point, and money better rotate. Otherwise, this market's going to have issues of going higher. They have to rotate. They have to. They have to rotate. They can't keep hitting. Otherwise, you know what happens? It's just they don't have to rotate. You know, I'm kind of being a little facetious. What it means is that when things get hot, they have to cool, and then you can look at them again. You know, the beauty of rotation is while these things cool, you can rotate into a group that is heating up. You know, but it just for good reason, but they don't want to commit to these economically sensitive things right now. And prior to that, it was the trade war. And now you might have another trade war. So can you blame them? You can't blame them. Tesla, well, you had Tesla with that Musk tweet. And then a couple of people in the room caught some put action off Tesla for a day trade. That was a big mover Friday. But, you know, now if you like Tesla as a long, I would pay attention to the flow. But you're not going to see the same type of flow we were seeing prior to earnings, because that was a lot of it was earnings positioning. My favorite thing to trade, well, it depends. Day trade or the semis. I like the semis as a group. The semiconductors have always been, you like that, Sean? The semis have always been my favorite sector from day one in the game. They've always been, you know, the beast group, the leader group. And they're, you know, you get some big moves in the semis. Big moves. So it'll be interesting here too. The problem again is earnings. Otherwise, you got an entry coming up here if we see flow. Oh, they bought a little of this Friday. They don't have earnings. But again, you have other, I don't know who would have a big impact on Taiwan semi. Who's that usually move with? Like AMAT or somebody? Apple. Yeah, Apple reported already though, no? Oh, you're saying off the Apple maybe they bought it? I don't know. NVIDIA won't have an impact on them, or will they? Say, like, I'll give you an example, right? Remember we saw some Micron buying come in, and we're like, all right, Micron doesn't have earnings, so why are they buying Micron weeklies? You know, maybe an upgrade, maybe they have something, but you think hard enough and you look around, you'll find out WDC was reporting. You know what I mean? That's the problem with earnings season. Micron and WDC move together 90% of the time, especially off earnings. That is the problem with earnings. Right there is the epitome of the issue with earnings. Micron didn't have a shot of trading higher off that WDC quarter. You know, no shot. So now let's see. You know, now if we see some action, but you also got to watch out. I think STX is another one in the group. Oh, they reported already. And there's one more name. Yeah, definitely. That's what I would be looking for. You know, any of these names you like, snapbacks. That's the plays. NVIDIA is a perfect snapback candidate. Perfect. You know, perfect. Does it all the time, too. You know, little pulls and snaps back, little pulls and snaps back. And even if it stalls here until earnings, you know what I mean? Even if it stalls, you know, let's say tomorrow it's down, even if you're early, you buy there, it has another down day, and then trades, snaps back. You know, that's what you're playing for. XN, oh, that's the metals. There's some bullishness on that ETF. I'm hearing some bullish chatter on this XME. So this is what now? This is not GDX. This is like US Steel type metals too. Gold, steel, copper, that sort of thing, right? So kind of what, an inflation play maybe in the works? You know, this caught some action. It reversed on Friday with a lot of other things. But there was definitely spec action in this US Steel. She's a tough one, though. There's a lot of selling. You could day trade it, but it's tough. Yeah, it's a tough stock. These things are tough. Look at this. You know, it kind of reminds me of the energy stocks, John, right? Like the energy sector. Every little rally, they just slap it down. They can't wait to slap it down. There's no real buyers there. No commitment is the word I'm looking for. Oh, yeah, it was a good day trade. It was a good day trade. It definitely was a good day trade. Yeah, you had a lot of heat there, especially how cheap it was. It's a cheap stock if you're playing the equity. Yeah, Paul, I mean, seriously, it's been going down that long. I told you guys a story. I remember when this thing used to be one of Lucci's favorite stocks to play off action when I first came to the steam room. This thing was a beast. It would catch multi-million-dollar sweeps. You wouldn't believe it if I told you. Multi-million-dollar sweeps. Some big players. It's your Gilead. It's close. You know, now it's just all spec garbage now. That's all the flow. X was notoriously known for buying the dip and they'd come in with $1 million sweeps. Multiple. You know, now it's all weekly stuff and short squeezing. And yeah, John, the US Steel was a blue chip. I kid you not. Like, this was a blue chip stock. This was no joke. US Steel was a beast. A beast. Isn't it crazy, though, like the cycles of the market and the economy? Like, this was shop back then. Pre-2008, this was the stuff to buy. Like, that's where all the money was made. commodities, even energy, home builders, all the stuff like you would ignore now was the place to be. And now, and that's why people keep calling for it, because this has been long now, where they've just been focused on the high growth software tech names. It's been a long time. Maybe this virus thingy will get some inflation going. We've been in deflation for a while. And then you had the trade war, right? And then they started to get some footing, remember? And then here comes now the virus. Every time they start to maybe make some headway, there's something else that shows up. Yeah, soon they're gonna be paying us to pump our gas. Nick, you're gonna pull up to the gas station. The gas attendant's gonna be like, here's $10. What do you want? He's gonna pay you. It's crazy. It's nuts. And Nick, were you trading when energy went parabolic? You had no idea. All the names that are dogs now, you would think were internet stocks. Guys were made like T-Boom Pickens. Oh my God, he made all his money. Yeah, it went bananas. Bananas. It was one of the biggest bubbles. You have no idea. Look at, well, now this is the split, right? Apache. You're talking about all blue chip names, all those stocks. COP, Chevron, and think about all the retirement accounts. They all were in those accounts. Everybody owned energy. You were looked at like you had three heads if you don't have any energy exposure in your account. All pre-2008. Before 2008, here, look. This is XLE. Look. You see that? This is XLE, Paul. Nuts. This whole move, you wouldn't believe it. Some of the names. You wouldn't believe it. It felt like they were going up every day, every single day. Kind of like shop, kind of like that trading. That's what it felt like. People made so much money in it. It was nuts. Nuts. Speaking of shop, what's she doing? She had a 902, right? Let me see this. Oops. Yeah. See, all these spots, I don't know, I don't know what you do with these things going into earnings. That's why I'm a little, I don't know what to buy. You got some good looking names out there, but a lot of these, like these stocks that you guys like to trade, they all had this killer rip. And now, consolidation at best into earnings. You hope they come down off earnings maybe, right? And maybe that sets up an entry. Stop it. You had shop at $30, Gerald? Where'd you sell it? $200. That's a score. And it's 600 now, huh? Oh my God. You look at these numbers. This is what drives you nuts in this game. That's the .com score is right. It drives you nuts. You look at the numbers, right? Some of these stocks, and so difficult to hold though. Like look at Gerald. He took it from 30 to 200. Like how can you even be mad at yourself? And then you're looking at a $650 stock right now. What'd you sell it at? 447 from where? Recently, you mean? From 365. That's a nice move though, What do you do? You wait for a 100-point drop and then you're right back to where you sold it anyway. That's the tough part. 4 days, $150. Like, come on. Like, look at this rip. You know what I mean? Look at this rip. That's where you get a little lucky, at the right time. That's where, like, see, like where we are now, okay? I'm being honest with you guys. Like where we are now, it looks difficult. You know what I mean? With earnings and the Niners and the breathers, it looks difficult. If you can get yourself to pull the trigger when things are at that sweet spot, it doesn't even have to be in a huge way. Just be ready when it's so hard to buy. You need a little luck, but if you get lucky and step on the right one, and you happen to hang on to it, you can, you make a year. You make a year. You never feel like you have enough no matter what you buy. But, these type of rallies we just went through. So my point being is that even if you didn't make, I tell you guys this every correction, even if you feel like you didn't make a big dent off this rally, what you should be looking at now is not how can I make up for it now here? What do I need to do the next time that setup comes around to be more ready? What noise do I need to block out? What do I need to do, right? For some of you, it's forget about the short side of that period because that's the most difficult thing. You're too bared up and you can't, that's the whole beauty of that setup. There's not a sign of a light at the end of the tunnel anywhere. Yeah, exactly. Honestly, you hit the nail on the head. It's like playing crap. There's too many balls in the air right now. There's too many balls in the air. Like this, there's some stuff to be bullish over, but you got earnings, you got things need breathers, you got too much, you can't trust the flow. Like I said, the sweet spot, that's where it is. And there may be another one that comes out of this. It can, without a doubt, doesn't take long. You get a little weakness and chop, you get some noise around it. That's the most important thing. A lot of noise around it, and you get a market here over the next couple of weeks during earnings season to chop around like this over here, right? You got people screaming new lows coming, virus gonna turn us into zombies, blah, blah, blah. And you got everything set up here. It's gonna be tough to fire. I can promise you. It's gonna be really difficult to fire. But you start seeing names catch bets. That's where you got a lot, you got to start looking for entries. Like I said, maybe you get lucky and catch one of the big ones. Them holding it's the whole other story. Yeah, now you got this whole China thing in the mix too. So there's definitely going to be noise, right? I mean, what's this guy going to do? He's going to start slapping tariffs and then, I don't know, Trump, I don't think he can find it in himself to do it right now, Matt, with the election around the corner. You think he can play hardball with China and destroy things? Right, Nick? I don't see it. And if you remember, the reason why he was doing it back then was to get the Fed. Right, Nick? That's all he was doing. He was doing it to get the Fed involved. Lower rates. That's it, Mnuchin. We just got to watch Mnuchin. When Mnuchin's working his magic, as soon as Mnuchin starts moving around, taking action, we got to be ready. He did it again this time. He did it the last time. He called all the banks up. Yeah, I don't see any good out of him playing hardball with China other than words. Because he starts doing tariffs in this mess. How's it going to help? It can't help. Now he's got the Fed all in. He's got everything he wants here. If he could get the economy little by little start opening up, you get a market off new highs going into the election, he's going to be tickled pink. Yes, I agree, Gerald. Somehow, some way, he needs it. He's going to have Mnuchin work his magic. We don't even need much of a dip here. This is such a big move that somewhere over here, when it's all said and done, would be awesome. but you never know. Oh, the other thing too, somebody, Chris, you just brought up VIX. The other thing I found a little bit strange out of the Sharpie camp, they had a position in VIX futures, right? And they were long into the lows. That's how they usually are. And VIX had that big pop, and they started putting hedges back on, okay, into the highs. They stopped literally right at the zero mark, meaning they refused to get short VIX futures. Usually they go from all in long to all in short into the highs. They stopped. Now, I don't know if that, means they think volatility is going to hang around a bit, but it's unusual for them to do that. I have it here. I'll show you guys what I mean quick. Hold on. And then we'll wrap things up. If anybody has any other questions or anything, I'll show you exactly what I mean. Hold on. Oh, this is the easier way. They had VIX on the ropes, and they just couldn't put the dagger in them. See here? So you have here, okay? So you see this is long, right? This is short, okay? And you can see, right? They were long over here. They get the big pop. They put hedges back on into strength, and they end up net short into the highs, or off the highs. Okay, even here, well, they were long, but yeah, they were definitely long. Okay, you had the big pop, and they ended up net short into the highs. They stopped here a little bit. They paused. So maybe they think there's one more pop in VIX coming, and then they'll short that. This is going to be interesting to watch. It's going to be interesting to watch which way they go from here. Yeah, but, usually you see it quick. You see this, you'll see 1 week where they just go whoop. Like, I thought that was coming. I really did. I thought that was coming. Every week, Tree. Every Friday. So it's going to be interesting to watch. Yeah. The other thing, even the VIX term structure stuff, they had it on the ropes. They had this thing on the ropes. Now it's right back almost, a little wheels off the edge here, though. But this thing was just ready. Once you start seeing these guys start popping up here, that's it. Game over. Because then you get the whole CTA crowd. You get all the trend following crowd. Once, what's it called again? Not backwardation? Backwardation. Once that gets resolved, you start to see, the whole trend following crowd start to buy S&P, sell VIX. They're programmed to do that. They were close. They had them on the ropes. But weakness came just in time. Just in time. So VIX, interesting where it's at. Could be another pop in it. Could be another pop in it. And then that'll be the tell. That'll be the tell. In 2008, there's some people talking about, I'm sure you guys probably heard, you had a big explosion in VIX, right? And then VIX came in and stopped going higher. It didn't go to new highs, I should say. And the market remained, weak for a bit. It wasn't like one blow off. And that was the bottom. I could go to a weekly and see it. But, this is not 2008. This is so different. See here? So this is what I'm talking about. So maybe something like this ends up going on. So here was the highs, and then you had this like hang around here like that for a bit. McElliott was taught, I think, if I read that correctly, I think what McElliott was talking about is what we're seeing right now. I could be wrong because that guy can confuse anybody. But I think what he was trying to point out on Friday actually came to fruition. I think what happened was he was looking for selling to pick up speed. What is this? Oh, this is a weekly. What level was he looking at? Anybody remember? 290. It was 290, right? No, 290? Could have been 290. Yeah, 290. You're right. So this is what he was anticipating, this kind of trap door where you would see some velocity pick up. Did he have any downside numbers? I'm going to look it over again now, Sean. I'm curious to see what the hell he has to say. Yeah, I'm curious to see what the hell he has to say, but that's what he was looking for. There was some velocity behind it once it broke. It looks so innocent on the chart. 2805. That's what I was going to say. 2805. That's the next level to watch, right? He was saying 2805. So right now we would be busting through that, and they flip short. I'll try to dig it up and see. Yeah, and I'll hear from. I'll see what the Gamma crew is looking for too. You know, what level they may be eyeing. Who asked the question I mixed here? No, 50 Cent hasn't been back in VIX. He hasn't been back. That will be interesting, right? If he ever shows up again, that will definitely be interesting. He's been MIA. He's been MIA. Yeah, a couple times, every time he shows up, there's a little bout of volatility. But there's a couple times he'll get in and then roll out, get in, roll out. But eventually he catches a nice move. But there's been a few times he's had to roll to catch that move. But this one was a juicy one. He's quarantined on his own island is right. This one was a juicy one. Yeah, from London. I read the article. I mean, he just nailed this move. You know, the virus and everything, he just nailed it. So can't blame him for not showing up. Gunlock got short, right? I think he timed this thing nice too. So now that's true. Okay, you have like Gunlock, sure. You got a couple of guys. They're gonna reel in some riffraff bears. I gotta Mike Wilson's bullish now. He was bearish into the highs though, right? Icon bearish. I saw that. I think Wilson is kind of looking looking at it like we're looking at it, kind of like a range type thing. You know, you want to look to get long something lower end of the range, upper end of the range. You know, put the guns back in the holsters, trim some stuff. So we'll see. I still think, as far as this market completely unraveling, I think there's too many bears still. You know what I mean? I think there's too many bears still. Anything's possible, you know, in this game, but I think there's just too many bears. Like I said, any real weakness, you're going to have bearish sentiment at extremes that we saw into the lows again. Yeah, Buffett basically said he can't find anything to buy. So you kind of knew they were going to take futures down off that. Will they stick? I think they reverse them tomorrow. Yeah, every Sunday we do this. And every Tuesday, for the most part, we do a webinar open to everybody else, Chris. All right, guys, go get some rest. Go get some rest. Again, big earnings week, a lot of big names out there, but we'll see. Maybe we could catch a reversal here. All right, we'll look for something to get involved in. Yeah, no Kentucky Derby now September, barring no virus, honey. No baseball, no derby. Don't get me started. That's right, Trey. All right, guys. Thanks for showing up. Again, anybody interested in Lucci's thing and all, go to wallstreetjesus.com. You get the link there. Have a good night, everybody.